Hi everybody, welcome to this new webinar on this channel on conventional forex trading. It's been a while that I'm not publishing videos or webinars, but of course the majority of the things that I had to say regarding the approach with math to Forex, it's quite exhaustive. In my previous videos in this channel there are about 62 videos. With this one, I don't know, something like about that, and most of them are webinars or practical examples and applications. So of course at the beginning I was having more material regarding that stuff, and then about the U.F.O and an engine or way to make an interpretation of the 8 currencies on overall 28 currency pairs. I started to develop something further than that, which is the trade win strategy, which win stands for something and actually is a perfect acronym for this situation, but it's not win in sense of winning, but allows somehow to have a very high probability of success. And the purpose of this video is to give a preview of something that I am studying since a while, because of course in this time where I didn't make that much videos, because it's always the same when I trade with the U.F.O, and it's something that regards my vision of the markets, and so part of my life is with that activity, and also it's my personal life. So I prefer then to publish a lot of videos, have majority of time when I have to deal with someone else that asks some help or whatever, or is interested to my projects, that it's more likely the time that I give with passion. But it's time that takes me out of other equations. But in real, this is just a preview, so it's something that I am doing underground, and actually I try to combine this video with a lot of requests via email from the majority, I have to say, that manifested a lot of interest in having an analysis of the Forex markets by using Excel. So spreadsheets, formulas, calculations. Well, of course I have my system that basically uses the U.F.O engine and then takes out from MetaTrader all a data feed of a certain amount of time and time frames, and I translate and transfer these files, these huge files of information that it's in real time, to an Excel spreadsheet, and all this data, which are raw data, are processed then sheet after sheet in formulas and calculations, and in order to make that process that from currency pairs build currencies. This kind of math then produces graphs and produces matrix that are very simple to read, and I will show you some examples. So I tried anyway to say something before, and then I start, and this is why it's the black screen, and I hope you have the patience of listen to my voice for a second more. I know, as usual, I receive also a lot of requests to have my expert advisor. In this case, I am already building something that is a project, because what I'm doing right now is doing this. So, I mean, there can be a solution if someone is interested to participate to this project, to have just a part of that. Of course, I cannot give my formulas, but I can give a system that helps to have all the data of the markets of 28 currency pairs right in an operation of 3 minutes, 2 minutes, just to update on a spreadsheet. And then anyone that can move through the currencies and currency pairs doing his own math, they can have that. But I cannot give a spreadsheet with all my formulas. This is impossible. Basically, let's do a brief forecast. So basically what you're going to see, I'm just making a little flash, okay? So what you're going to see here, it's another way to approach to Forex and to the currencies, having a lot of matrix, okay, that you can have Euro, USD related, of course, with themselves, but with different processing. So for example, here you're seeing something that goes from the analysis of close to close and close to open, and goes back and have this computations here and gives a final sentence, final reading of the currencies on this line. Here it's something that I've created also to help myself on the trades, and which is basically that once I decide to fix that the USD is weak and the Swiss franc is strong, for example. Okay, and GBP is weak, and I don't know. So this way, when I update my values, I have memory of what I'm trading, okay? So by having this memory, if I set up some trades, if this varies like from red to blue, it means that I have to close all the trades having US dollar short. So this is a way also to having a take profit or stop loss, and this is only intended for my manual trading. There is no automation. There is a huge automation on having all the, I just show you one data. These are all the datas that are taken from all the currency pairs, okay? And in the same spreadsheet. And as you may see, it goes very fast. And let's do this. See, there are a lot of calculations that can be done. Okay, and as you may notice, there are a lot of calculations. So we go back to this, which is something that comes from all those data formulations, and by reading a matrix there can be some logic that can be expressed in this final report of the markets. And actually the next step of my analysis goes into the direction of the analysis of the strength and weakness, as usual, of the currencies related to the divergences that can be spotted, but divergences not of the currency pairs and with some kind of oscillators. I have created my own oscillator for this, but it's based on currencies, not in currency pairs. So it's more accurate because it goes directly to the 8 elements that compose the 28 currency pairs in Forex, the most traded. Of course, there are plenty more of them. Okay, so for example, this is a reading from server time at 1:15. This is another reading at 18:11, and this is another reading at 21:17. Okay, so just to give a brief kind of answer to the many requests of being clear on what the hell I'm doing by making some formulas. And so this is just for respect to the many mails that I have received and the people that are connecting me via Skype for having some kind of confrontation. And so just to be clear and simple, okay? Okay, this is a bar, one of the kind of representations with more information if compared to the classical closed line, because it takes that has a high, maybe, I don't know, an open, a close, and a low level. So these are 4 elements. All these distances can be measured, okay, and have a meaning. Have a meaning if I use the same formula. Let's say that I want to understand something in terms of math about by having this information. So if I apply a formula that it's close minus open, okay, in this case the close, which is lower than the open, will be a negative number. That tells me that the direction of the candle is in this, is pointing downwards, okay? But I can also make sophisticated formulas from this. Problem is that when we go with pairs, pairs are just a fraction of a whole, okay? And so on. The ensemble of all these processed data are again formulas, because we have to make x1 ratios, all that stuff, okay, under the same. And this is one currency pair, let's say, in terms of another. But it's not, if we do this for each and every currency pair, of course combined, and taking care of the fact that there is this base quote convention. So when we do analyze then the movement of the euro as an ensemble of these extra calculations, of course the spreadsheets are starting to grow and grow, but they are starting to also refine data until we arrive to euro till yen, okay, and all the other currencies in between. MetaTrader does a good job, but it's limited when we want to go further and we want to have a different and more interactive way to create our strategies, because if I have control of the formulas, I can change them, I can study a model in the real-time market, not by backtesting, which is absurd. It's totally absurd. Backtesting is good for robots. Somehow the backtesting, I mean the ones that you see especially in the videos that I have to sell something. Okay, so it's clear that this process requires a situation where MT4, and I'm finished with this, but it has to be clear, MT4 runs an EA that provides some files, Excel files, okay, and these files are taken from a folder and with a subroutine through some extra programming in a Windows environment, they go in another folder, okay, all this data. That is the folder connected to the spreadsheet. That of course has some macros for updating the data, therefore grab the data from this folder and go into the Excel, and then another action which is refresh this data and all the calculations that are after these charts. And so this process means there is something to build on a PC in terms of software setup, and requires for a complete update cycle from 2 to 3 minutes. This means having fresh data every time we want, and stable if we are capable of creating formulas that can give a stable representation of the market for a certain amount of time, because market moves always. They cannot go backwards, okay? But market moves always. So there are always opportunities and threats. Okay, so we have to be careful of that, and of course all you see in this video is for educational purposes, to open your mind and see the things from another perspective, and everyone is welcome with respect, and therefore I go further with some rest of analysis. Let's take down this stuff. Okay, so let's do a practical example. This is on the Friday. Of course, this is the time that I am having this video now. Okay, so this is the date of today. So yesterday, the 7th of June, Friday, I got this data. At this time, on a 60-minute, therefore 1 hour time frame analysis, and all this information, for example, you can see here there is also a kind of evaluation that I discovered. For example, these are all the currencies along the 30 hours, so this is the day, compared to GBP. So this flat line is GBP, and these are the currencies behaving related to GBP. Okay, so, but this is not the point, is that even if I have all that stuff, I can have a percentage of success only by having the idea of what is weak and what is strong, from the 70 to the 85%, sometimes 90%, but it's quite enough. And with other analysis from the charts, that can be raised as a percentage of probability of success. But there is also a way to analyze data in a logic, by having a logic result. And by having logic results, math has to be converted from values that can be, for example, positive or negative, or that can be above a threshold or below another threshold, in zeros and ones. Therefore, they can be true or false, or they can be a confirmation, because they can be filters. Like if I want to have 3 values up in order to say yes, this is a kind of filter, because it takes only one of them that they are not aligned, as you can see, for example, here on this analysis. This Aussie is displayed to 0 because I have a negative value, and a positive value. Okay, in this case they are both negative or positive, for example, and these are related to my calculations, so it's my business. And let's see, for example, that at this time the U.F.O engine combined with the analysis of the divergences of the currencies, okay, again, and we read from right to left. So this is the 0, this is the now, this is the midnight of Friday, okay, and here as well, with more hours, 6 hours. So, for example, there was this setup of euro-dollar in buy, euro strong and dollar weak. Okay, let's fix time frame around, let's say, okay, okay, so this is around 1 p.m. and this is euro dollar, okay, and euro dollar is buy. Let's take a look, for example, also to Euro GBP and GBP Swiss franc. So in this case, it's up 90 pips. Okay, so let's say Euro GBP, Euro buy, GBP sell, and GBP Swiss franc, sorry, Euro GBP buy and GBP Swiss franc sell. Okay, so Euro GBP buy, okay, 45 pips, and what was the other, GBP Swiss franc at the same time sell. Okay, let's say also GBP yen sell. Okay, this is because I am studying not only the strength and the weakness, but also by studying divergences, which is a topic that there's a lot of stuff in there, but it's applied in this case on currencies, but it's the same concept, it's just applied on a different line, the currency. Gives me a more accurate perspective. Of course, let's say, for example, this is another example, 18, the end of the markets, the end of London session, more or less. And in this case, euro dollar is set to sell. And also, for example, Aussie USD or New Zealand dollar US dollar are in sell, USD yen is in buy. So let's check. This time around 18. Okay, so 18, it's more or less here. Okay, so again we said euro dollar in sell, euro dollar in sell. Of course, this is the end of the market, so there's not this kind of volatility, come on. But of course, at the end of the markets, if I have a reading on another moment, like if I make the reading at 8:30, sorry, yes, 8:45, I already have something that says goes up because the markets are handed here. But anyway, let's see if we trade on this time, and this is 15 minutes, so for about an hour we have 20 pips, which can be a lot if you think about it. Okay, and in positive almost from some minutes, or yeah, maybe 1 hour in the worst scenarios where when you trade very late. But anyway, this is something. We were saying also USD yen in buy, and USD yen is in buy, and it's 25 pips for a lot of time in this case. So by differentiating the portfolio, you can also have a mix, a more optimized reward. There was also, if I'm not wrong, what was the other? Oh yeah, Aussie US dollar, which is a sell, and also New Zealand dollar US dollar in sell. There it goes. Let's see also some examples from 21, very end of the markets, just to trade, I don't know, half an hour, something like that, maybe an hour, but games are already done for the day. But it's fine, it's good and accurate to have a vision on multiple situations, because not everybody can do that at the same time. So let's see the accuracy in, of course here, see scenario is still different again this time, and let's say New Zealand dollar US dollar is still in sell, but let's say GBP and Swiss franc, GBP started to be strong and Swiss franc weak, and also GBP and New Zealand dollar. So let's see for a second, let's see first New Zealand dollar US dollar, which is this one, and of course at 21 was there, something like that, 21, there it is, okay, 21. It's anyway a movement that even if you trade for not that much, it's in the right direction, right? So New Zealand dollar US dollar in sell, and then we have GBP New Zealand dollar. Let's see this. Okay, well, GBP New Zealand dollar was in buy, not that much, but was in buy. GBP Aussie and GBP Swiss franc, let's see this one. GBP Aussie, okay, some retracement, but then up, and GBP Swiss franc. And here something like not that much. Okay, fine. Of course, this is end of the end of USA section, the American section, and markets are closing. There's no Wellington until the next Monday. So this is like the ranging phase of the end of the market. So we can be more or less successful in one or the other ways. Of course, we also should have traded compared to these values, would have been like retracement, so would that not give that much. But let's see also USD Swiss franc. And USD Swiss franc, it's a buy. And see also USD Aussie US dollar sell, and there it goes. And what else? Was the Swiss franc? Yeah, I made all the possible combinations. This is what I am testing now after a phase of 6 months of analysis day by day, and the results are pretty impressive even in the trades, because it's something that goes in the direction of having very low risk and very high probability. Of course, this is my math, and I think part of the stuff I can say, I can give it as a knowledge, and that part of it must be a process of work that everybody must do. Therefore, when you take action in the markets, at least you know better what you are doing. Otherwise, if you don't know something and the best way to know something is to create it. My math at the end of the things is very simple, but it's like a very complex circuit made of simple operations that then produce an output that makes me read the markets this way, now in a quite stable way, which is even more relaxing to read than any other way that I've did before. That's why it's the evolution, and that I will give it a kind of this name: trade wind strategy. Trade wind strategy, because win stands for what is not. Therefore, the word is trade what is not. Normally, we see that strong and weak currencies are behaving, but some of them have already made a move and others are waiting and will make the move later, or some of them are the leading currencies for retracements and others are the very weak on that territory. Therefore, the ones that are not traded are the ones that are starting to express strength or weakness. And by having a confrontation with an oscillator and a divergences study on the U.F.O engine data, this appears to be coherent on every time you take a snapshot of the markets. So I don't know, I haven't seen anything like what I'm doing, but there are a lot of other things that I really appreciate in other people, but this is my approach. So I'm using Excel as the most powerful way to create math strategies, whatever the math idea can come. And maybe if I have a confrontation with some of you, I know that you have also your own way to do math in markets. But the positive thing is that you have to ensemble this and go concretely towards the direction of the currencies and their analysis. Okay, so I hope this can inspire some of you and give you some answers on also the processes that are leading to this kind of results. Manual trading, because it's always a good opportunity to learn instead of giving to a robot any chance to do good and bad and we don't know what it's doing. Because actually I had also some issues recently, and I think also some of you, by using Windows systems, because of all these updates, and all these updates are continuous calls towards the network, and they stop the right flow of data on the trading platforms. I also started to use CTrader as a platform for as regard only to input my trades, which is more efficient for a certain perspective. And I am using this algorithm and the U.F.O in order to analyze the data from MetaTrader in this case. So this has to be the setup. So with a lot of trading platform connected to the network, and then all the traffic from Windows with the updates, the upgrades, and all that stuff, sometimes can be noisy. But then when you create something quite simple and stable on a very powerful math developer, which is Excel, of course the kind of strategy is more related to sit down, analyze, have an overall picture of the markets and take action. This will be possible also for those of you that are already requesting me, and let's see after this video what do you think about this, the expert advisor for getting the data out of MetaTrader and into Excel, with the ability of updating them and refreshing them, and refresh all the formulas that anyone can create with an Excel spreadsheet. All the sophistications, all the stuff, and all that regards my own spreadsheets development along these years, because I think I made something like thousands and thousands of spreadsheets, backups, progressive backups. Anyone can do that if they have this kind of approach, so the math approach and the ability of make computations. In that sense, the output when you create graphs and when you create matrix can be very effective, as I show you in this video. With this said, I thank you for watching, for continuing to subscribe in my channel, for the emails that you regularly send me, and I thank you for really, I appreciate this, even if I'm not publishing that much at this moment. Maybe one day that could be a kind of, I don't know, shared webinar or hangout, I don't know. Maybe it's your, it can be the initiative of someone of you to do this, because really I have a lot of other things that I would like to do in life. So this is a part of that, and from time to time I come out when I have a process of evolution of the things I'm doing. This is crucial, and this simplifies my way of seeing the markets, and I talk about, of course, Forex market. So I wish you all the best, and to enjoy life, and to have a good space and have a good time. Bye.